Hi, today we're going to talk about the mortgage stress test, give a little bit of an introduction for those of you that may not be familiar with it. What is that stress test? Canadian mortgage borrowers are required to pass this stress test whenever they qualify for a mortgage with an institutional lender. The mortgage lenders evaluate the applicant's income and debts, and they calculate these debt service ratios. And under the stress test, the lender can't use the actual rate on the mortgage when they make those calculations. They have to use the higher of a qualifying rate, minimum qualifying rate of 5.25%, or the mortgage rate plus 2%. Number 2 is what is being applied today with rates so high, most mortgages between 5 and 7%. So it's the mortgage rate plus 2% that is applied to calculate those debt service ratios. So in other words, you don't have to prove that you can afford the mortgage rate that you're receiving. You have to prove you can afford that mortgage rate plus 2%. So it's a stressful experience to go through this stress test. And there's no way around it though. If you're dealing with an institutional lender, you have to pass the stress test. Although there are some, like a couple of the credit unions, that have a no stress test mortgage product, but the rates are high. So it doesn't make a whole lot of a difference in the calculation. And private lenders don't apply a stress test, but their rates are even higher. So those are expensive mortgages. It applies to both fixed rate and variable rate mortgages, and it applies on all new mortgages, all refinances, and switches, which is just transferring your mortgage at renewal from one lender to another, if the mortgage is uninsured. If it's an insured mortgage on a switch, the stress test does not apply. Market participants have lobbied now that rates are higher for a reduction in the stress test rate, but the feds have refused. They're not receptive to the arguments that we present to them. Despite the fact that while they say it's been a benefit, there's really no public data that they share that clearly demonstrates that the stress test has helped. Anecdotally, it kind of makes sense that since rates have risen and there is this interest rate buffer through the stress test built in, that it helped, but we really don't have any data that proves it. So yeah, it can be stressful. Does the stress test help borrowers? There's a pro and a con argument here. The pro argument is that yes, it's created this buffer, so it protects borrowers against interest rates, and also it protects the lenders against potential interest rate increases that might lead to an increase in mortgage defaults. The counter argument to that is that it reduces a borrower's purchasing power, obviously, and so the problem we have with that, though, is that it really disproportionately harms first-time home buyers and the lower income earners. Often these top-down measures from government tend to do that. And the rich don't care that much about the stress test. They can afford the higher rates. But those marginal borrowers just trying to get in the market, they're the ones who really are most affected by this. So we think it's kind of economically discriminatory in a sense. So not just in terms of being able to qualify, but someone that really has their heart set on buying a house may not qualify for an A mortgage, but they could qualify for a B mortgage. So the stress test kind of has now pushed a customer that in years past would have qualified for an A mortgage into a more expensive mortgage product. Again, mostly that just affects the lower income earners. So tips for passing the stress test. Like for any mortgage application, it's very smart to keep your credit score as high as possible. So maintain good credit, make your payments on time, and don't take out too much debt. If you have debt, you can reduce that overall debt, and that will help your GDS, TDS, those debt service ratio calculations. You can use a larger down payment. That shrinks the balance of the loan that you need and would lead to a better outcome under the stress test as well. You could also consider a longer amortization. Most amortizations are 25 years. You can go maybe 30 years because that longer the amortization, the lower the mortgage payment. So it might give you a better chance of passing the stress test. And the last resort is maybe the house you're looking at is too big. It's a mortgage that's too large. So downsize your expectations and see if you can pass the stress test debt service requirements. If you want to talk to us about the stress test and how to qualify for a mortgage, we're here at any time to talk to you. Call us on the number on the screen. Find us online at frankmortgage.com, or you can scan that QR code on your phone and book an appointment directly with one of our mortgage agents. Thanks for watching.